Hello business owners in UAE. If you are one of those business owners with a company set up in Freezone or you are planning to establish one, this video is for you. We will tell you whether or not you will be taxed next year when the government is going to implement corporate taxes. So stay tuned. Hello and welcome to your YouTube channel Money Matters by Finnection UAE. At this channel, we will discuss topics of interest for our business owners in UAE. So whether you are CEO of a group of companies with business inside and outside UAE, or you run a bakala or cafeteria, there is something for everyone in this video. We discuss topics like value-added taxes, corporate taxes, financial management, business management. So if you are one of those business owners who want to grow your business on solid foundations, subscribe to this channel and get regular updates. Feel free to like and share this video with your friends. Okay, so before going into details, first we need to know what is the difference between mainland and free zone. So in UAE, there are certain designated areas which are classified by government as free zones. And besides those areas, everything in UAE is mainland. So there are some 45 plus free zones in UAE, and those free zones play an important part in overall economy of the UAE, and they are one of the major contributors. So what is a free zone? So free zone are those special designated areas where they have their own independent laws and regulation with respect to the finances, with respect to the taxes, and with respect to general administration. So they give you certain privileges or certain differences in the regulation compared to the mainland. For example, until last year or so, when you form a company in mainland, you always required a local national as a partner or as an agent in your company. But in free zone, that has never been the case. If you are an expat, you want 100% ownership in your company, you could do that in free zone since forever. Likewise, free zone allows you to repatriate your capital and profit 100%. These are usually busy established communities which come to become a free zone. Often they are focused on certain type of activities. For example, ecom is more focused on one type of activities, Javza is more focused on other type of activities. Likewise, knowledge village is more about education and other that kind of training and all that kind of stuff. So different free zones have different kind of activities that they focus on. Another important factor about these free zones are that they are 100% exempted from corporate taxes. So yes, that's true. When you form a company in a free zone, you get 50 years tax holiday from corporate taxes. But would that be applicable from next year onwards or not? That we are going to discuss in this video. So as far as corporate tax regime in UAE is concerned, free zone companies and free zone branches, collectively they are called free zone persons. So free zone persons are subject to corporate tax in UAE from next year. When I say subject to corporate tax, that means they have to follow all the requirements of corporate tax, which is filing requirement, they are subject to audit, they are subject to penalties if they don't follow or they violate some of the regulations. So everything will apply for free zone persons except the fact that their corporate tax rate will be zero. So yes, government is going to honor that tax holiday for 50 years, but still you have to comply with all the corporate tax regulations as a free zone company or a branch which are there in the corporate tax laws. The only difference is that you would be taxed at 0%. So that is the general principle about corporate taxes for free zone. But as somebody said, devil lies in the details. So let's dive into the details. So in order to be that free zone that is given 0% corporate tax rate, first of all, you need to maintain adequate substance, which means your business should have their economic base within the free zone. And secondly, you need to comply with all the regulatory requirements of that free zone. So in order to enjoy that 0% tax rate, not only you just have to incorporate in free zone, your economic basis should be primarily in free zone. And secondly, you should comply with all the regulations which are given by the authority of that free zone. So what type of income of a free zone person will be taxable or not taxable under corporate tax regime? So essentially there are four types of income that we need to discuss in the context of corporate taxes. First of all, free zone income earned by a free zone person by transacting outside of UAE. So if the income is sourced outside of UAE, that is 0%. If the income is sourced from same free zone or another free zone, that is also 0%. But if the income is sourced from mainland, then we need to see whether that is an active income or a passive income. So from passive income, it means income which is royalty, dividend gain, capital gain, interest. So that kind of income is not taxable. If that is an active income, which is the income generated from your core activity, that you do to earn profit in your business, if that is your active business income, then next we have to see whether or not you have a mainland branch. If you have a mainland branch, so the income and expenses pertaining to mainland sourced income from that mainland branch will be taxed as per regular tax rate, but your free zone sourced income or outside UAE sourced income will remain at 0%. And likewise, in another scenario, if you don't have a mainland branch in UAE and you still get a mainland sourced active business income, in that scenario, you will lose your 0% corporate tax status and your entire income would become taxable. So that's where a business needs to make a decision about their mainland source income, and that is something you need to do before your tax year starts. You need to see that what percent of your income is coming from mainland versus free zone. You need to actively see that what is your actual place of supply for those businesses. Would it really be called a mainland source business or a free zone source business? Another thing you need to see is the cost of compliance. So either you get ready for 9% tax rate on everything, or you create a mainland branch. If you create a mainland branch, that has its own licensing cost plus other administrative costs, plus you need to maintain two separate set of books. So is that worth it versus the tax saving you have from 0% from your free zone? If yes, then that is something you should do before your taxable year starts. And if not, then probably it's better off to make an election to get taxed like a regular company despite the fact you are a free zone company. But that election is irrevocable. That's why that decision has to be taken keeping a lot of factors in view and with a long-term view. We at Finnection can help you with that analysis and to understand what are the implications of taking such decision. Another thing we need to remember is that right now there's a 0% withholding on the mainland sourced income for free zone if that free zone is under 0% corporate tax rate. What is meant by the withholding tax? So in general scenario, if there's a withholding tax, so if when the transactions happen at source, a percentage of that transaction is withheld by the payer and usually is paid to the regulator. In this case, it is 0%, which means that nothing would be withheld, but gives us an idea that going forward that may be the case, and a certain percentage might be withheld for the free zone companies who are enjoying 0% tax rate. And then maybe at the year end or quarter end, when they submit their tax returns, they would be refunded about that amount. But for now, that 0%, as a free zone business owner, you don't have to worry about it. But important thing is you need to evaluate your business if it is sourced from mainland, and if that is without a branch in mainland, then you need to see, is it really worth it establishing a branch or versus the benefits or cost of getting everything taxed at the regular rate. And if it is with a branch, mainland branch in UAE, then you need to start separating your books for mainland versus free zone so that you can retain 0% status on your free zone sourced income and you only pay taxes on your mainland sourced income. So let's discuss a special scenario for free zone companies where they transact with their group companies in mainland. So whether or not they have a branch in mainland, the transaction between group companies are not taxable, and that would mean that the free zone company would not have to pay any tax on their sales to mainland company. But at the same time, mainland company cannot use that expense in their profit calculation. So income is not taxable, but at the same time for mainland company, the expense is not deductible either. Now we will discuss few scenarios to understand corporate taxes for free zone better. And first example is of a coffee shop based in 𝐬𝐧𝐞𝐬 Dubai Airport free zone. That coffee shop is based in 𝐬𝐬𝐧. All clients come to that coffee shop, they drink coffee, buy donuts and all that stuff. So the only sales that is coming, the place of supply is that free zone, and that 𝐬𝐬𝐧 company that does not have any related parties or any related companies anywhere in UAE. So all the sales is subject to 0% tax. Let's take another example. Another company which is based in 𝐬𝐬𝐧 Dubai Airport free zone, and they manufacture coffee mugs and they export it to Kenya. Again, that's not taxable because that's outside of you. Let's take one more example. There's a cleaning company which provides cleaning services, commercial cleaning services based in 𝐹𝐺A, International Free Zone. And now let's assume if all the clients are in 𝐹𝐺A, so that would be subject to 0% because everything is in free zone. Now let's suppose if all the clients for that commercial cleaning company are either in 𝐹𝐺A or other free zones such as TCOM or 𝐺AFZA, so in that case as well, that's subject to 0%. Now another scenario, that commercial cleaning company has clients in mainland. So now we need to see if they have a branch or no branch. So if there is no branch in mainland for that commercial cleaning company and the clients are based in mainland, the place of supply is mainland, in that case that disqualifies that free zone company from 0% corporate tax rate, and all their active business income will become taxable at a normal corporate tax rate of 9%. But in another scenario, if that company is providing services to clients in mainland, the place of supply is mainland, but they bill through their branch in mainland. So the branch in mainland is issuing the invoices. In that case, only the income generated by that branch will be taxable, and only the expenses made by that branch or allocated to that branch will be deducted against that, and whatever is the net profit for the branch, that will be taxable. And that commercial cleaning company, wherever they are serving to other clients either in 𝐸𝐽𝐺 or any other free zone, that part of income will remain subject to 0% taxes. Only the branch income will be subject to regular tax rate. Okay. Another scenario. So there are two companies, Brother Co and Sister LLC. They are group companies related by each other by virtue of common ownership. Brother 𝐸𝐺𝐶O is a free zone company and Sister LLC is a mainland company. Brother 𝐸𝐺𝐶O provides services to Sister LLC where the place of service is mainland. So what happens in this scenario? Yes, you are right. Due to being related party, Brother 𝐸𝐺𝐶O sales to the Sister LLC will not be taxable or will be taxable at 0%. However, Sister LLC is not going to include that expense in the calculation of their net profit for tax purposes. So these are few scenarios which are there to help you understand how it works in case of free zones. I hope you guys liked the video, and if you did like the video, please leave your comments, like the video, share it with your friends, and subscribe to video as well. We'll see you again in the next video. Have a great day.